What's up, guys? Welcome back to DCA. What we're going to do today is talk about this recent large price move to the upside that we've seen, which sees Bitcoin currently trading at $41,700 and Ethereum trading right at around $3,000. We're going to ask the question, was this a real move or are we being faked out right now? So we're going to look at several metrics to answer this question. The first metric we're going to look at is the price volume. So what is the price volume and why would we want to look at that? Price volume simply gives us an estimated amount of total dollars being traded on exchanges for the asset. So this is important because it's essentially telling us a rough estimate of interest in the asset. In times when the market is extremely bullish, like we saw back in late 2020, heading into early 2021, you can see the price volume was increasing over that time. Now, why don't we just simply look at volume? Well, volume is dependent on the actual price because the higher the price of an asset is, given a stable level of interest in the asset, there will be less volume traded. So, in other words, if $1 million was traded on exchanges at a price of a $1 million Bitcoin, the volume would be one. Whereas if $1 million was traded for an asset when Bitcoin cost $1, the volume would be 1 million. Okay, these are extreme and made up examples, obviously, but they get the point across in that you could have the same level of interest in the asset, but depending on where the price is, your volume could be wildly different. Okay, so price volume would just tell us whether the price was $1 or $1 million. If $1 million were traded on an exchange, the price volume would be $1 million. So it just tells us how many dollars are being exchanged on the asset every day. So, this is what we're seeing here. As the market becomes more bullish, the price volume tends to increase. And you can see that perfectly demonstrated here. Back in January and February, that was when the market was most bullish for Bitcoin and, even December. And you see there was a steady rise in the price volume over that time. Now, another thing you tend to see is as you enter further and further into a bear market or an extended downtrend, we can say, volume tends to trail off. And that's indicating declining retail interest in the market. So that's what we saw through June and July of 2021. Now, what did we see when the market broke out of, that period where we essentially were declining and doing nothing but declining all the way from May out until until late July of 2021? What we had here was essentially a time when there's very low volume and it's much lower than all of the adjacent times. Now, why is this? These typically occur because you've exhausted all individuals that are at a place where they're going to capitulate, or in other words, that they're going to panic sell or dump their asset because they're scared of the price going lower. And that's what you saw here. So you get this, the price is falling, the price is continuing to fall, but the volume is very low. Okay, so that starts to be a bullish sign, meaning you're running out of sellers. When the volume's very high, that means, when the volume's high and the price is dropping, that means you have a large number of sellers. But what you had here was a declining volume and a slowly declining price. So that's typically a bullish sign. And then what did you have? You have some of these breakout wicks here. So we start to head up and we start to head up, and then you start to see your volume increasing. And that's another bullish sign. So we had this time here when the volume had essentially dried up, and then that was countered by an increasing amount of individuals buying the asset, and you're seeing the price volume increase. So this means you have this period here. So if we just shift over just a few days even, we have this period here where lots of bars are much higher than all of the adjacent bars, and they're on high volume to the upside. So this means we have buyers stepping in. And this happened from around 30,000 all the way up to around 41,000. Then the volume dies off again. There's a little bit of selling, and then the buying resumes right here. Okay. So we had nothing but buying going on into selling on lower volume and then buying again on higher volume. And from there, what happened? Well, we continued to go up, but it was essentially sideways movement for, all of the end of August into essentially October. So right until the end of September, and then at the start of October, we had fairly low volume. You see all through here, there's relatively low volume. And then what do you get? Then we start to see another breakout period where the volume starts to pick up, the volume's picking up, and the price is going up. And that's in general, a bullish sign. Now, what happens from there? Well, then you start to see, again, increasing red volume, meaning people are selling their asset. And when do they start doing that? Well, they start doing that right when we start to get into the $60,000 range, reaching towards new all-time highs. And this is what we've said before. This is a practice that we've seen in every market cycle so far. When we start to reach towards new all-time highs, individuals who hold the asset as a long-term holder, they start to sell. They don't typically dump all of their asset right once we get to the all-time high, but they do start to sell some. And I've demonstrated this in multiple videos now, so I'm not going to go back and show it again. But we've seen this where long-term holders are selling their asset right once we start to get to new all-time highs. And that's what we started to see right in the end of October. We lost some of this higher buying volume and then started getting many more of these bars that were, essentially larger sell side volume. Okay, so for instance, here, here, and then our largest obviously was on December 4th when we dropped from 53,000 all the way down to this wick that took us all the way down to 42,000. All right. So that started this sort of cascade event where, we've been trending down ever since that time. Now, there were still buyers in this market at some of these higher prices. You saw a lot of buying here in the end of October, the 28th and 29th. You saw some high buying in the beginning of November, and then you saw some people buying here in the beginning of December. But overall, you sort of knocked out a lot of your retail interest, and then we've come back down to this lower side volume now. So you can see that we've been trading at much lower volumes than we were during the rally anyway. So from the rally from July all the way until November. But now what have we seen? Well, we've seen the market for Bitcoin and crypto in general sort of pick up in terms of the positive side volume. And this has all started happening right after this last capitulation that happened in the end of January. So right here, we saw the price drop from a high of around 41,000 all the way down to 35,000. And we obviously went down further from there. In fact, we've made our low right at around 32,000. All right. So our low occurred, actually, it was closer to 33,000 on January 24th. But what you've had since that time is a slightly increasing amount of volume. Okay. Our volume has been on the positive side. We've obviously been moving up during this time, and it's been slightly increasing. But nonetheless, it's not convincing. I've heard a lot of people say that, oh, there's just been massive buy side volume. And yes, it has been decent volume. If we look here on February 4th, the day we made the big move, where we went from an open of 37 all the way up to around 42,000 close. There was decent volume, but this was by no means, this type of volume that we saw back on July 26th. This doesn't mean just because the volume isn't as high yet that we won't get there, because we could certainly, we did go down to 33,000. And, we have had some buying going on ever since, even if you go back to January 24th, where we had a day where we were at around 230 billion. So there has been decent volume. Now, what are we going to want to see? So that's, I think, the more important thing at this point is, what do we want to see going forward? And what we're going to want to see is the volume continue to show strength to the upside. And we're probably going to want some more strong follow-up days. So, yesterday on the 5th, we had a fairly weak day. So we were down for the day and the volume was very anemic. So on Monday, what we're going to want to see is a nice follow-through volume in order to confirm that this is actually a rally. So, another thing we could just look at, if you just take the trend line, we have broken this trend to the upside now. Now, I don't put a lot of stock in these, especially on shorter term time frames. Like, here we're only looking at approximately 3 months or so. So, I'm not going to say that this is the end all be all, but it is nice to see us break to the upside through this trend line and do it in convincing fashion and on high volume. So those three things sort of combined are a more positive sign. Now, the next thing I want to talk about is, let's take a look at the DCA index risk model. And why are we looking at this? Well, let's look at where we were in terms of price. Where did our price get to with relation to where we were on the risk model? So the first thing I want to point out, let's just zoom out and let's zoom out the price of Bitcoin and take a look at this. So if we go back in time, notice that when we were all the way down here, so if we just take a look right here, once we were down to our close at around $35,000 on January 22nd, okay? On that day, we hit a level of 13 on the DCA index risk model. If we zoom out, how many times have we been lower than that in history? So if you look here, we've only been that low several times before. We got that low during March of 2020, which was the COVID capitulation event, when many people were panic selling because of the global lockdown. We got that low in November all the way through March of 2019. Here, after this giant capitulation that we had in November of 2018, which saw our price go from 6,400 all the way down to $3,000 ultimately. And then one other time back in the giant capitulation that you saw in early 2015. So, basically right here in December of 2014, all the way through mid 2015. So those are the 3 times in history where we've been at least this low. Now notice, when we do get that low, it can last for several months that we, sort of trade in these prices. So just because, we're at this level where we've been very few times before, doesn't mean that we're necessarily out of the woods yet and that we could go back down there. But what is one key characteristic that we've seen each time that we've been down at these prices? And that is the fact that when we're at these prices, it's typically one of the very best buying opportunities. So if you started buying when Bitcoin gets below 20, so let's say back in 2014 and 2015, at worst, what you would have done into the next market cycle, if we just measure it here, would be, so we got below 20 about right here, which was one of the higher prices that we were below 20. And you would have been up approximately 6,000% going into the next market cycle. In this market cycle, if you would have bought once we got below 20, which occurred right around here, you would have been up around 1,200%. And then obviously during COVID, if you would have bought right when we got below 20, which happened essentially immediately, you would have been up around 1200%. So what that is indicating to us is that when we're down in these levels, these are historically the very best times to be purchasing the asset. So it doesn't mean that we need to go up right now. But what it does mean is that if you are a long term investor, in my opinion, this is a great time to be buying. It's not financial advice, it's simply what I'm doing. But the data is telling us that when we're in these levels, in these 20 and below levels, these are historically the best times to be buying the asset. So, that's sort of my stance on the issue is that when we're down at this level, I don't know if this is, if we saw the bottom right here um, in late January when we got down to around $33,000. But what I do believe anyway is that acquiring the asset right now, if you have a long term perspective, is going to pay off in spades for you because everything that we've seen with Bitcoin and everything that we know about Bitcoin is that it trends up over time. There's times when the asset is up, there are times when the asset is down. But overall, historically, what we see is Bitcoin trending up over time. So, what I'm getting at is the fact that these movements to the upside, these movements to the downside, when we're not in these parabolic runs, when we're simply, in times when the market is trending down slowly, like we've been doing over the last, over the last 3 months, these times are ultimately unimportant. And that's why, I say I've been acquiring the asset ever since we've been below 50. So as I said in a video the other day, I bought some in the mid 50s. I bought some at 50. I bought some in the 40s. And then I started buying a lot once we got into the 30s. So, like I say, every Friday is when I purchase the asset. And it's because I truly believe, these, even if this isn't the bottom, let's say we continue down, let's say doomsday scenario, we go down to $15,000. That's fine. I'll just keep acquiring the asset because I truly believe that when the next market cycle comes around, we're going to be at much higher prices than we're at right now, and I will have acquired the asset at all ranges of prices below wherever it's ultimately going to get to. And then I will start dollar cost averaging out of the market. As to the question of where do I think we're going right now, I think, the key thing is going to, I think the key thing to watch is going to be looking at the volume, seeing if interest picks up in the asset. Even if it's not, we don't need to necessarily go back to, this FOMO type level of interest in the asset. But what you do want to see is a non-declining volume. You can look all through the price rise when we went from around $29,000 our low all the way up to $69,000 our high. Look at the volume here. We were in a range that was higher the entire time than essentially where we've been over the last, ever since mid-December. So this is where you want to be right in here. We want to see the volume stay somewhere, above this level and to the upside, right? Because, you know, like we said, when you saw the volume getting really low here, well, that's kind of what you saw right in here. You sort of exhausted all of your sellers. And when you've exhausted all your sellers, that means all that's left to do is for the long-term holders to start picking the asset up and doing so increasingly. And I think that's what we're seeing. What I'm suggesting here is ultimately dollar cost averaging into the market is going to, sort of alleviate all of the stress of worrying about whether this is the real, whether this is a real move or not. Because if you're dollar cost averaging in and you have a long term perspective, you're not worried about whether this is the real move or not. Because the real move will come when it comes and you'll be ready because you've been acquiring the asset over time. So that's my general stance on this, guys. And I know, if you came here hoping for a price prediction, you're in the wrong place because ultimately what I do is sort of look at the long term perspective and judge the asset. We can definitely do analysis on what's happening, but ultimately, unless you're interested in making, 25 or 30 or 40% gains on the asset, what it does in the next, few weeks is unimportant. Because if you're in it for the long term, 25, 45, 50% is literally nothing. It's pennies compared to potentially what you're opening yourself up to. So that's going to be it for this one, guys. If you guys like this type of content, hit like and subscribe. You could also head over to the Discord channel that we have to sign up for the DCA index risk model. I'm only going to be offering the model for several more days, maybe up to a week before I take it off. And, I'm just kind of going to stop giving it out after that point. So if you're interested in it, you'll need to sign up soon because I'm ultimately going to be taking it down. So if you guys like this type of content, hit like and subscribe. And until next time, as usual, see you.